Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 11, the short exercises. Note, accounting is about understanding the concepts and applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. As far as the statement of cash flows is concerned, it can be confusing, but just realize that you do have somewhat of a template, and trying to really delve into the theory behind the different activities is not that necessary. I mean, you do have to think through the different activities. It's sort of like making journal entries. But the more of these you do, the easier it becomes, okay? Just like doing journal entries. You've seen a situation, if you can remember it, you can mimic it and apply that new situation, but you're always going to, you will sometimes have new situations, and you still have to go through that thought process. Very akin to making journal entries. All right, so let's jump on down to, we stopped at 5 here. Right, so it says here, classification of items as operating, investing, or financing. Indicate whether each of the following transactions would result in the operating, investing, or financing activity, or a transaction does not affect cash for a statement of cash flows prepared by the indirect method. All right, so A, we're buying equipment, right? So that would be an investing activity. Number 2, we have a debit to cash and a credit to a long-term investment, right? That would be an investing activity. C is a debit to bond payable and a credit to cash, right? So that would be a financing activity. D is a debit to building, credit to note payable long-term investment. There is no effect on this one. You're not affecting cash at all. All right, by the way, go back to that template and, for the indirect method, and look and see, which steps, or even go back to those 3 slides in the theory that I had created and look at the different activities and see which one each falls under, in order to be able to determine the effect for these journal entries. Right, so E is the loss of disposal on equipment, right? And a debit to loss and a credit to equipment, right? So, we're basically selling the equipment and we're booking the loss because it's the same amount, all right? And that ends up, because it's a loss, the loss is shown in the operating activity section of the statement of cash flows. All right, so F is a debit to dividend payable and a credit to cash. A dividend payable is a financing activity. G, cash and common stock. Right? Common stock is a financing activity. Treasury stock, all right, and cash is also a financing activity. Cash and sales revenue, all right, sales revenue is an operating activity. Land and cash, well, land is a long-term asset, so that's going to be an investing activity. And a depreciation expense shows up on our income statement, so that's an operating activity. Relatively easy. Again, just go back and look at the template, or look at those transactions on the slides that I created in the theory videos. Next exercise. Operating activities, indirect method. They reported the following, matrix reported the following data for 2014. An income statement, depreciation expense, and then on the balance sheet, excuse me, an increase of receivables and decrease in payables. And compute the net cash provided by the operating activities according to the indirect method. So you start out with your net income, which is 42,000. Okay. Then we need to go down through each one of these. So if our depreciation expense is 8,000, we have to add back in the depreciation expense, right? Right. Because remember, if you watched the previous video, I explained that the depreciation expense decreases the net income. Well, we're getting rid of the depreciation expense because it's a non-cash item, so that would increase our net income. So that's why we're adding that back in. Right, so then we have our increase in accounts receivable, right, for 14,000. Right, that increase means that we have to subtract that out because we are not receiving cash for that. Right, so that's a negative 14,000. A decrease in accounts payable means we paid off our accounts payable, and when we're paying off, we're decreasing our cash. So we're decreasing the our cash by $6,000. And then of course, when we add all of those up, we end up with 30,000, and that is our net cash provided. By operating activities. Okay. So you start out with your, basically we're taking our net income and then we're looking at the transactions and adjusting accordingly for those that affect our cash position. Right, 11-7. Assembled Trident equipment accounts, assemble the following data for the year end. Prepare Trident's statement of cash flows for the year ended April 30th using the indirect method. Cash balance for Trident's equipment at April 30th was $11,000. All right, let me do this. I'm going to shrink this down a bit so they have space, and I'm moving it over here. And now realize that you know, you can look at the solution, all right, and that is the proper formatting. I don't see any issues with this formatting of this statement of cash flows. Okay, so look at the solution, and when it comes to creating a statement of cash flows, this is what it should look like, to include the heading, the descriptions, the indentations, and using the two different columns because of math, right? And having your correct underlines on things like that, right? So that's the way it should be properly formatted. I'm not going to go in creating this. Obviously I'm using the pen and I'm scribbling on a piece of paper, and if I was going to type it up or put it in a Word document, it would end up looking like the one that's in the solution. So I'm going to take shortcuts. I'm not going to put in the heading here. You can look at the heading. It's basically the same as an income statement or the statement of retained earnings, except you put statement of cash flows. I'm going to abbreviate, and I'm going to be sloppy here, but I'm getting the correct information, all right? And when it comes to typing it up, well, I'll type it up formally like it should be. But right now I'm just doing the homework problem, and I can take those shortcuts, all right? So the first thing that we have to do is we have to, when we're creating our statement of cash flows, aside from creating the heading, right? We want to have our three different sections. So we have cash flows for our operating activities. Okay. We have cash flows for our investing activities, and we have our cash flows for our financing activities. And then we have our net. I'm going to end up needing space here, I think. So I'm going to move this up. Cash flows for our financing activity. And then we have our net cash, net increase, well, our net increase in cash in this case here. This could be a decrease in cash depending upon the information that you have. All right. This is very akin to students learn, as an example, when students learn about the income statement, they're kind of like always shown how to have a profit. Okay. Our revenues are greater than our expenses, and you rarely see in educational material where it shows the income statement actually having a loss. Well, kind of like the same thing ends up happening here with the statement of cash flows. They always seem to always put an increase in your cash position, right? They don't really show a decrease in your cash position, right? But realize that it could be one or the other, right? And of course, if we have after our net increase in cash, we have our cash balance. For the previous, the end of the previous period, which in this case is April 30th, 2013, and the cash balance for April 30th, 2014. Right. Now, we go back up to our operating activities, and we need to look at them. So we start out with our net income, right, which ends up being 72,000. That's right here. And then we have to have the adjustments, right? So we have our adjustments to reconcile to net income. All right. So the net cash to net cash, reconcile net income. Let me get this right. Reconcile net income to net cash provided by operating activities, right? And so the first thing we're going to look at, we have to go through our information here, and we have proceeds from issuance of common stock, a payment of dividends, an increase in current assets other than cash, a purchase of treasury stock, purchase of equipment with cash, a decrease in current liabilities, payment of long-term liabilities, proceeds from the sale of land, and depreciation expense. So depreciation expense, if you go down through your template, all right, you'll see that generally they start out with depreciation expense, and that's 23,000, right, that we're going to add back in. That's why it's a positive number. Then we also have to look at the increase in current assets other than cash. So you have increase in current assets, right? And since that's an increase, we're going to subtract out the 35,000. Right? The reason why is we increased the current assets. That means we paid out cash in order to be able to buy those current assets. And then on the opposite side of the coin, we have a decrease in our current liabilities here. Current liabilities, right? And in order to pay off our current liabilities, we're paying, $4,000 we're paying off. Right? So then we have here the net cash provided by our operating activities, and that ends up being, let's see, so these here add up to, let's see here, negative 16,000, and 16,000 from 72,000 is 56,000. Okay, now notice, even though I had said using the two columns here, statement of, when you're looking at the solution, statement of cash flows generally end up in 2 columns, but remember what I had said about doing mathematical calculations? Well, I actually probably would have made this a 3rd column, okay? Because I have a math calculation here to get here, I have a math calculation here to get here, okay? So, I mean, that's just a preference of mine, all right? But when you're looking at most of the statements of cash flows in textbooks, it's all going to be done kind of like in just two columns, all right? So then our next section is, and I'm going to actually change the color to be able to separate it out a little bit visually. So we have our cash flows from our investing activities, and we need to look at what investing activities. So we have a purchase of equipment, and when we're buying equipment, we're paying out $58,000 in cash. And then we also have, let's see here, proceeds from the sale of land. Sale of land, and that's $63,000. So then I'm running out of space. It's going to be an issue here. So I have the net cash provided by investing activities, and that's going to be $5,000. So in green here, I'm going to be cash flow from financing activities. And then we have the, let's see here, okay, proceeds from the common stock. So I'm just going to write CS because of space limitations here. Common stock of $6,000. Then I have the purchase of, let's see here, treasury stock. And so that's a negative $7,000, because I mean, from the common stock we're getting cash, okay? From the treasury stock we're paying out cash, right? We pay off our notes payable. So let me erase some of this here. So we have our notes payable, and our notes payable is $38,000. Okay. We're paying that off, so that's money going out. And then we also have here a payment of dividends of $5,000. So our net cash provided by financing activities, right, is going to be negative $44,000. So then we have the net cash, no, net increase in cash, sorry. Net increase in cash, which is the $56,000, the $5,000, the $44,000, which ends up being $17,000. Okay, and then we show our cash balance for April 30th, 2013 of $11,000, and then our cash balance for 4/30/2014 is the difference between those two, which means we should have a cash balance of $28,000, and that's double underlined, right? So yeah, you follow along with that, go back over this, follow along with it. Watching the video, look at the solution manual as we go through so that you can see, um, you know, what it in a formal perspective it should look like. And as you can see, when I'm doing this, I mean, this takes quite some time to do. And yeah, you see me abbreviating and whatever have you. When I'm, as part of normal workflow, if I'm doing a homework problem or I'm in the workplace, whatever have you, this is what I'm going to be doing on a separate sheet of paper. But when I type it up to present it formally, it's going to look like what is in the solution manual. Okay, so but also realize that, as you can see, this is what it takes to create the statement of cash flows. You're given all of this information here, and then you have to go down through all of those different activities and look to see if any of them are applicable. Okay. And as they're applicable, you're adding them to your statement of cash flows. You start out with your operating activities and you go down through the list of operating activities. Then you look at your investing activities and you go down through that list of transactions, those activities, to see what's applicable for investing. And then you also go down through the financing activities. And if you have anything that's left over, you want to take a good hard look at it to see if it does affect, because remember, you're going to have non-cash transactions, right? And you might have some of that additional information being given to you, and you have to decide whether those, it could be a transaction you just haven't seen before and it's not on your list of activities, and it might belong to operating, investing, or financing, or it just might be a non-cash transaction. Okay, and in which case it just doesn't go on there. All right. So you go down and you're creating, every time something is affected, you add it, you add it, you add it, you add it, you add it. And then it's just a matter of making sure that you're formatting things the correct way and you're writing in the correct descriptions. And again, doing it on paper on the side, you're taking all kinds of shortcuts. But when you're actually going to create the statement itself, you get a copy of one that's, done formally correct, so you can look at that solution and go, okay, this is exactly the way I should recreate it. And then when you're actually taking a test, okay, and you're asked to create a statement of cash flows, there's no, I mean, it amazes me how someone can't just copy out of a book. Okay, they lose points because they can't copy out of a book. I just don't get it, but that's just me. All right, so anyway, you just provide the information as it is, do the math correctly. And the hardest part the hardest part about this is in determining whether it's an increase or a decrease, a plus or a minus, for the different activities. Okay, and that's all help. You have that template. Then, like I said, you work through the transactions and you think about the net effect on cash. Is it affecting cash? I mean, it's sort of like doing a journal entry. If you watch the videos on how to make a journal entry, my first question that I said is, does this affect cash? Okay, and if it does, is it an increase or a decrease? But basically the same exact thing as the thought process. All right. So hopefully, this made sense. If not, go back and watch it again. I know it's a little dry and boring trying to create it. All right. But you're going to end up creating quite a few of these. So, get used to it, and the more you do, the easier they become. All right, so I'll see you in the next video. And I think the next one is, yeah, doing the direct method instead of the indirect method. All right, see you then.